It's really important to have the right sales strategy if you own both your business and its premises. That way you can achieve the best possible sale price down the track. Hi, I'm Ali Cain and I'm the host of the Buy That Business podcast. Each episode we talk to expert business brokers about everything there is to know about buying and selling a business. Today I'm joined by Michael.newham from Fin Business Sales. Welcome to the podcast, Michael.
Thanks, Ali, and thanks for having me on.
So, Michael, tell me a little bit about your background.
I spent most of my previous working years in a family business that operated in construction supply, mainly commercial, contracting, as well as some retail, security and commercial property as well, before I became a business broker with Fin maybe about 7 years ago, coming up to.
So it's fair to say, you've been around the traps and you've seen a lot of different business sales and business experiences.
You could say that. I've had some interesting sales and come across quite a few businesses where they've had properties attached to them and had to work through those to come up with the best outcome for the client.
So what are some of the advantages if you do own the premises where your business is located?
I'd have to say it's probably a little bit like the decision to either buy a house or rent the premises. So you've got control over your tenure and what you can do to the property, and also I guess you're investing into the future. So there's plenty of upside there.
How do you decide if that's the right approach for you?
Well, look, I guess it really depends where your business is up to in its life cycle, the type of business and many other variables. And I guess most of this discussion is going to be based on, that there is a lot of variables with this sort of thing. But if you're starting up a business, it probably doesn't make too much sense to go out and buy something straight off the bat to operate from. Probably better off sort of working along, seeing how things go, and then making some decisions there, but making some informed decisions so that you make the right decision and getting some help.
So it tends to be more mature, sophisticated businesses that have an established operation that can, afford to buy their own premises, or at least the business owner can afford to buy the premises?
Yes, that's right. And I guess it depends as well, where the business is up to with profitability and all that sort of thing. If you're diverting money away to pay off a loan, well, you could be putting that towards building your business and that sort of thing. So that's other things you've got to take into consideration as well.
That's right. I guess it's a strategic decision about whether that money would be better off invested in, new products, marketing, or whether the best return in the end would be to invest in those premises.
Yep, that's exactly right. And it can be fairly tricky sort of and that's why I'd suggest that you get some advice.
So obviously the $64 million question is, how much rent do you charge yourself?
Yeah, so you really probably should look at charging market rent. And there's some reasons why we do that probably as we're going forward. But when it comes time to sell a business, it's a bit hard if you've set it up so that you're sort of charging yourself a smaller rent, and then people are looking at the sale, and then you've got to make adjustments and things like that to the sale and do changes to add backs and things like that to try and smooth it out. So I would suggest market rent's probably a good idea, unless you get some advice that it should be otherwise for some reason, for some tax purposes and things like that. But just keep in mind that can affect your aspirations down the track when it comes time to sell the business. So you just got to be a bit careful how you go about it.
Because I guess the risk is, you buy a business premises and you think, I'll charge my business a peppercorn rent to keep its costs down, but that's short-sighted and a false economy, because down the track you won't be able to, or you may not be able to realise the highest possible sale price for that property because it can't demonstrate that it's earned, as you say, market rent. So, Michael, what are some of the pitfalls that you find businesses face when it comes to buying their own premises?
So obviously, besides the fact of looking for a good property, that's going to have good return and on a sale down the track and strong rental return, and the usual things about location and amenities and that sort of thing. Probably the most important thing and probably the main point of the topic of today is, put simply, the value of the business is affected by what rent you pay, the same as the value of the property is affected by what rent you receive. So when you're trying to sell both, there's a trade-off between these issues as they are related, or interrelated. So you need to be very careful how you set it up to maximise the sale price or value of both. But this can be a bit tricky, as it depends on what your plans are with the property. If your rent is not at market value, it can affect the value of the business and the building, and this can work for and against you on either of those if you're not careful. However, you can also manipulate it sometimes to maximise the sale price of the business and the value of the building, depending on what you intend to do with the property. So if you intend to hang on to the property as an investment after the sale or sell quickly, it can have a large bearing on how you set the sale up and what rental figure you should be asking the new business buyer or owner to pay. It's a little bit tricky there, and that's why I suggest that you sort of need to get advice from someone like myself, a business broker who's going to help you with the sale of the business and has got experience with commercial real estate as well, and also your accountant.
Can we talk about any example around that in terms of how to get that balance right between the rent that the business should pay and the rent that the premises should charge, sort of thing?
So like I sort of alluded to before, the reason why you sort of set it up at market value is so you've got, I guess, a bit of a point to start from. But you can always make an adjustment when you're presenting the business to sale about what rent that you want the new incoming owner to pay. So, for instance, if you're looking to, say, maybe just sell the business and hang on to the property, then you're probably better off maybe setting it up so the property is probably receiving a higher rent, okay? Because if you're going to hang on to that over a long term, well, then you're probably going to receive more in rent rather than a one-off sugar hit from the sale of the business, with the formulas for that as well. So, as I said, it's a little bit complicated. It's probably a bit hard to deal with in depth in this short time. But, once again, it's definitely something that you need to talk to your advisors about.
Yes, I can imagine it's quite nuanced, and striking that balance, as you say, requires experts taking into consideration all the different variables associated with both the property and also the business.
That's spot on.
So what structure do you find business owners hold their business premises in? Is it typically through a self-managed super fund?
That's become fairly prevalent, people setting up self-managed super funds these days. So, and obviously there's tax advantages there. But once again, you really need to start talking to your accountant from the very beginning about how you purchase it, in what entity, whether it's privately owned, in a company, in a self-managed super fund, and you need to set up a plan going forward that takes all the different things into consideration about tax and returns and all sorts of things like that.
It certainly seems to me like a good problem to have if those are the sorts of considerations you're making.
Yeah, for sure.
All right. Now, that's almost all we've got time for today, but I'd just like to finish by asking you, Michael, what's your best piece of advice to someone who wants to own their own premises and also run their business from it?
Well, I'd have to say that if you do it properly and wisely, it can be a great vehicle to maximise your financial position down the road. But you need to think of it as a long-term investment and be very careful how you set it up, operate it, and then finally how you turn it over when the time is right.
I guess, like most things, it's an idea to take the emotion out of it and just look for the business attributes and really think about making sure that you do charge market rent for those business premises, taking other things into consideration.
Exactly right. It's not like an emotional decision like buying a house or a car. It's something that needs to be done with consideration and calculations.
That's great. Well, thank you very much, Michael. That is all we've got time for today, but we do love to hear from the audience. So please get in touch via the contact details at the bottom of the podcast if you'd like to give us any feedback or story ideas. Thanks so much, and we'll see you next time.